Good morning, friends. Vladimir here with you, and this is the weekly review for the last week of October. Well, we all were waiting for the European leaders to say their words. Are they going to make any agreements about the health program? Are they going to bring more money to the markets? But, I would call the ego from each of them just stopped the process of this program, and nothing actually happened there. And we all still wait. They say it should be probably delayed maximum until Wednesday, but each day now can be critical, and it could be decided by each day. Until the picture is not clear, I would seriously, very highly, from all my heart, recommend not to risk long-term trades. If you want to trade intraday, you're welcome. If you want to trade short-term, welcome. Swing, well, too dangerous. Long-term, nothing to talk about it as for now. And something important is based on the chart. Let's take a look. For example, look on the euro dollar. Watch what we have here on the weekly chart. 20 MA of the Bollinger Band still holding. The resistance around the 140 is still holding. Means that bearish move could begin any moment, but stochastic is rising aggressively. Confusion, right? Well, let's continue. Daily chart, we have kind of waves, but it's still below the resistance, and it's still below the 200 MA daily chart. And also, the histogram right now begins to be bearish. Are we going to have a bearish divergence from stochastic as well? Well, everything here is possible. That's why I say stay careful, especially for the long charts, the weekly, the daily. Now take a look on the Aussie. Same story, same divergence, same possible stochastic divergence on daily chart. So, and still below the 200 MA. So it might zigzag up and down again and again. We might see some moves like that until the picture begins to be much clearer. New Zealandian, same story. As you can see, the divergence is here. Everything might change in a minute. Pound, same story. Although the pound, from all of them, I would say looks the most bullish. And I could see the pound going to 160, 70, maybe 161 even. But once again, I think it will be just too risky, and I'm not sure it's going to be worse. If it will retest this line, the 158.50, 40.50, the support, and hold it, I would consider a strong bullish move from this area for the pound dollar. Until then, it's just too risky to join. So once again, I really recommend stay careful. Don't jump into any of the trades that look good, because the picture might change any moment. The one to follow, from my point of view, is the Aussie against the Kiwi, because I think we are about to have the last up move for this pair during the next days, which could take us to 129.90, which is this level, this resistance area, little below the 200 moving average of the daily chart, to complete the continuing divergence here. As you can see, make another continuing divergence here, and take us for some bearish ride, most likely back to 128 again, or even lower to around 127. So let's see and wait, because as it looks right now, the continuing on daily and possible regular divergence here after some ride up on 4 hours should and could stop the rising for this pair and begin the down move. This pair, from my point of view, is the most recommended to concentrate on for the next days, as long as the picture on all the majors is not clear at all. About the euro pound, another interesting pair. Well, it clearly holds the daily 20 MA, as you can see. And most likely once this line will be broken and we will see some clear close below it, and I would say below the 0.8670, it might begin below this area, right? It might begin the move we all look for, and it might take us down to all the way for the previous stiff support 0.8540 level again, and even lower. And I want just to remind you, the investors are still bearish for long run for this pair. Another interesting one to watch is the dollar yen. Dollar yen really fights the 76. You see the spikes, you see the attempts, you see the false breaks, and it really tries to break. If it will break successfully, we open the gates based on weekly chart, as you can see here, for another ride down which could easily take us to 70 and to 60. The only problem here is any possible intervention from the government. As they promised, they won't let it happen. But as we all know, the market is stronger than everyone, including government. So they could intervene for short term, but most likely that for long term they don't have enough tools to act there. So this period, friends, is going to be so interesting, and as long as the market waits for decision from the leaders, we must be careful. Aussie Kiwi is a good one to concentrate on. It really looks good. All the rest, for example, Euro Kiwi, you can see how it looks like. All sidewing, all not clear. The market is waiting for some signal. And on each of the dollar, we might have anything, because we have a potential divergence on each of the charts, as I showed you just before, right? And it might affect this divergence and take it down, or it might break this divergence and take us high. It all depends from the leaders. That's why, friends, just stay careful. Nothing serious to talk about, nothing serious to show, and I would suggest just concentrate on intraday, on the short term if you would like here, like short term divergences or something like that, but not the long terms. The long terms might cause you serious damage because of how the market behaves. So don't jump in, friend, and have a beautiful week. I will update once there are things to update, of course. And I wish you a beautiful week. And once again, please be careful. Protect your profits from better periods. Thank you for your time watching this video, and concentrate on the Aussie Kiwi, as I would say 99% sure about this trade. And the levels to watch are 130, 129.90. That's pretty much the level. 131, and then 132. Levels to watch for possible strong retrace for some hundreds of pips correction. Beautiful week. Thank you for your time. Vladimir. Bye bye.